Hello, it's Sunday Fun Day. This is, again, this is going to be every Sunday. The questions are different. This one is no exception. And for some reason, people are coming into a lot of cash. Let's get into it. Thank you all for coming. I hope the audio and everything works. Thank you, Dog One, B-Man, Sean D, T&D, K8, and everybody else. Let's get into the story. This is called Retire Rich Math. A lot of questions about allocations and how to retire and this, that, and the other, and also how to leave a legacy. It's pretty fun, but the thing I say is if you are allocated right, the future is very bright. We're going to look at Bitcoin price targets, flows, who's buying what, how much is there. Bitcoin today is having a Sunday pump day too. Shout out to Jim Chanos who went short MicroStrategy. Oh dear. Anyway, we'll also look at a retire on update as well. Perps, disruption, rotation, retirement models, and so much more. So let's get into the story. Yeah, and of course, very important. This is not financial advice, just a guy on the internet. And all the questions come from everybody on Patreon. Thank you to everybody on Patreon. And thank you to Travels and Adam Q and everybody else. First question. Again, this is from Cito from, let's say, Kansas City. Is Tesla still riskier than Bitcoin given all the Bitcoin treasuries? Can you do a quick updated face-off? So this is very interesting and very important to talk about because when investing, and we're going to talk about this a lot today, you have to balance risk and reward. So there's always going to be maybe something that's a little bit faster, but the question is, what is the sure thing and how safe is it and what is the return? And that's what I always benchmark. Kind of like think of an expected value calculation as we go forward. So let's jump into some numbers and see what we got for Cito. First of all, I'm going to turn myself off so you can see this. This is the Bitcoin year-to-date flows. What I did was I calculated all of the flows into Bitcoin treasuries. By the way, there isn't a day that goes by now where another company anywhere on the planet announces Bitcoin treasuries. It's out of control. Everybody's doing it. Pretty much every enterprise that has some loose cash in the balance sheet or needs to improve their stock performance, they are buying Bitcoin or Solana, mostly Bitcoin. And that is crazy. Treasuries was on my bingo card in 2024 that it would be huge, but I did not quite think it would be quite this huge. And here are some of the numbers that actually support that. First of all, if you look at this chart, I blow it up so I can see it a little better. Year to date, I didn't even go back to last year, but year to date, Bitcoin treasury companies have purchased 177,000 Bitcoin. The ETFs have snagged 111,000 Bitcoin, and miners have actually purchased 20,000 Bitcoin as well. And the Bitcoin mined is only 61,000. So we have 250,000 Bitcoin deficit from just these cohorts. And I'm not even talking about sovereign wealth funds or other players that could be snagging some as well. This is so important. So let's look at another view of this, because the other question is what's happening? Is this accelerating or is it business as usual? So I calculated the flows by quarter so far. And I know Q2 is not over yet. It's halfway through, but look at this. The Q1 purchase rate of Bitcoin is 1,616 Bitcoin per day for just those two cohorts. Ladies and gentlemen, Q2 purchase rate is now 2,759 Bitcoin per day. That's a 70% increase, okay? And remember as well, only 450 are mined per day. This thing is being gobbled up like crazy, which is good for us. And that's why maybe at last we're seeing some good action. And remember as well, Bitcoin was under 75K but only a matter of weeks ago. And it's funny as well. Now Bitcoin price is 104,500. And somebody actually said to me, it's hilarious. My first ever YouTube video was about Bitcoin, and I guaranteed the price would exceed 103,000 by the year 2030. Now at the time of Bitcoin, the price was about $4,000. And I said, this thing is going to 103,000. And it was circulated. Very few people saw the video. About 10,000 people saw it. But it's what made my channel viral. But the people that saw it told me I was insane. Okay? I said, I guarantee you, pounded my fist on the table, this thing will be worth more than 103,000 by the year 2030. That's how I sandbag. It's the year 2025. It's 104,000, nearly 105,000, nearly hit 106,000 today. So bear that in mind when you look at some of these numbers too, as we go forward. But just somebody reminded me of that video and I completely forgot about it. But anyway, 5 years early is okay. Now, everybody is chasing this Bitcoin stuff, whatever the heck that is. These are just the companies. You can see here, you have these companies own over 700,000 Bitcoin now. Just this little list. This is not the 212 company treasuries that actually have Bitcoin right now. They're stacking like crazy. But just these companies, MicroStrategy, 568,000, which they made a big buy. Saylor will report a big buy tomorrow morning, and I'll report on that first thing. I actually stay up all night waiting to see what it is. Tether, over 100,000 Bitcoin. Tesla, 11,500. SpaceX, 8,300. What do Tesla and SpaceX know? Wonder. Anyway, the point is, a lot more are coming. And it's not just these companies, but other companies too. These are the ETFs that own a ton as well. The ETFs own over 1.3 million Bitcoin. So you add these two together, the ETFs with just those 7 treasury companies, that's over 2 million Bitcoin. Remember, there'll never be more than 15 million Bitcoin. And that is about to increase violently because Q2 is already 70% higher than Q1. And we've only just begun. It is absolutely insane. Anyway, let's get back to the actual question. Turn off my image again. Here are some price predictions. I shared this the other day, but I'll share it again because it's pertinent to this question. And this is from the so-called analysts out there, the smart money. And some of them are very conservative. But the expected value mean of all these targets is 278,700. That's a lot higher than my price target. I'm getting to a point here, so bear with me. If you take the Bitcoin at 103K, which is now higher, because that was a few hours ago, is 103K. My target is 130K, 129K, give or take. And analysts are now 278,700. Tesla is now 350. It'll probably open at 340 tomorrow because of the fear about the US downgrade. And the IA target is, by the way, that doesn't impact Tesla at all by any stretch of the imagination. IA target is 500 to 650 by year end. And the analyst target is also 650 by year end. So we'll see where this goes. Now, if you put these together, and I include my targets, equal weighting with the analysts. So the target price for me for Bitcoin is 130, analysts 278, and my Tesla midpoint is 575, analyst target 650. You can see the upside for Bitcoin right now is 98.4%. If you take the weighted average of my target with the analysts, and Tesla is 75% upside. Again, the weighted target of both. So for now, for the first time in quite some time, Bitcoin is ahead. Very important. Now, if there is a strategic Bitcoin reserve, which on Polymarket is about a 30% chance it'll happen, if the US decides to try buy 1 million Bitcoin, all bets are off. Bitcoin's going to the moon straight away. These analyst targets of 278,000 will look small. But we don't know if that's going to happen. And that's the problem. Therefore, you need to allocate accordingly, according to those risk parameters. Now, if I rip out the analyst targets and just use mine, Bitcoin upside's 26%, Tesla upside 64%. And that's how I'm allocating, etc. as we go forward. The problem is I'm way heavier in proxies and Bitcoin than I am in Tesla. So I'm trying to fix that to make things happen. We'll talk a lot more about rotation as well. But I hope that helps and answers your question. That is the latest face-off between Bitcoin and Tesla. And they are the two, as I've said since I began this channel, the two alpha predators, apex predators that are out there in the world. And if you have Bitcoin derangement syndrome or Elon derangement syndrome, etc., it doesn't matter. My job is to find the safest, best risk-reward assets out there for myself, and I share all I do too. So let's get into the second question. This is from, read this carefully, Salsobro. I've just discovered this tool called Stack Math, which helps to project how much Bitcoin might be needed to retire on I'd love to hear what you think about how to use tools like this and how it compares to the way you approach your retire on models. Very good question. So I actually had a look at this, and thank you for bringing it to my attention. I dug through it, but the site kept on crashing. I wasn't able to see the actual results. I used multiple browsers. It was just wasn't exactly working. But it looks like if they are trying to do what I think they're trying to do, it's probably the same as what I've always done in all the retire on models. And that is this. And I will share this as well. By the way, we are going to, now that we got the rotation model done after 10 months of sheer hell, now we will Webify our other models and put them on a website. So you can all play with them yourself. But we're also going to make it highly configurable and multi-asset capable. So you'll be able to plug in whatever you have, whatever shares you have, whatever crypto you have, how many shares, plug in your appreciation per annum, etc., and see where it all goes. So that's coming. Now, if we look at the power of 3 Bitcoin, and this assumes a 25% compound annual growth rate, and you're pulling 50,000 a year, which increases over time because of expenses by 5%, and you will be holding Bitcoin till 2032 until you start pulling your 50K a year. That could leave $1.1 billion for loved ones. Now, there is talk from companies like Fidelity that Bitcoin could hit $1 billion in the year 2040. Kind of crazy. We know that Saylor is saying Bitcoin could hit $13.1 million out there in sort of time frame too, about 20 years from now. We don't know where it all goes, but either way, if you assume a conservative 25% CAGR, you could leave a lot of money, like $1.1 billion for loved ones, and still live well. That's why I always say control the burn. And this is the model that we've always used, and we will, again, Webify that. A visual, and even if you take this, by the way, and reduce the CAGR to 15%, starting in 2030, starting now, out to the year 2057, that still leaves you over $100 million for loved ones. Think about that. Now, this is what the visual looks like. Again, balanced through 2057 with option to spend more if you don't want to leave as much for your loved ones too. So anyway, that model is coming, and Saito, hope that helps. Next question, and this is a question who somebody wanted to remain anonymous, and I will remind everybody as well, when you're online and you're talking about things, like sometimes I hide names if they're sharing kind of what they're holding, their bags, etc., especially if it's large amounts. You don't want to make yourself a honeypot, which is a target. Like scammers from Coinbase call me 3 times a week. I've already made videos recording their entire way of scamming people, which is quite comical. Check that in the scam prevention playlist as well. But beware, okay? Because the honeypot has gotten so much more valuable, the scammers are upping their game. In fact, scammers haven't gotten so intense. Shout out to Mr. Dip. They're actually telling people to block other scammers because there can be multiple scammers going after you at the same time. Remember, the way to prevent from getting scammed is never give anything to anybody. Don't click on anything. That's all you need to know. Then you'll be fine. So let's get back to this. I was asked by a close friend that is 57. He just sold his company and sold his large house for a much smaller, cheaper one, and now sits in a pile of cash. By the way, I think it was last week or the week before, I recommended downsizing. Don't be house rich and asset poor. Okay, if you find yourself in a situation where 2/3 of your wealth is real estate, that's not a good place to be. Okay, flip it around. Maybe 1/3, maybe 10% is perfect real estate. Maybe even 3% or 5%. But bear that in mind. Now, good job there. If his smaller house was paid off and he had a very large Tesla holding, and just a few weeks ago, he sold all of his MicroStrategy position, averaging $21 a share basis, which means he followed me into the MicroStrategy trade. Well done. Good job. And my basis, some of that is much lower than that, but and bought more Tesla and NVIDIA and has enough Bitcoin for his current family. What should he do with the pile of cash? If his goals were to retire and never have to worry about anything again, just spoil his grandkids, what would you do with that USD? His biggest fear is making a huge mistake this late in the game. So this is, again, everybody has a different kind of profile, risk tolerance. Sounds like this person is set. Sounds like they do have some concentration. And I don't know much about the numbers, but this is kind of what I pick up. And this, of course, this is not financial advice by any stretch of the imagination, but it's kind of how I view things. Okay. So stress as well. I am just a guy on the internet making fun videos to try and guide people what to do. Now, this is kind of like, call it a guiding philosophy, because you did say you don't want to screw this up. Shout out to Raoul Paul, who has a different flavor of that expression. But really, you need to focus on preserving your bags. So that goes back to the whole risk reward. Focus on disruption and Bitcoin. That'll help you beat inflation and debasement and maintain the value of your wealth over time. Very important. Also, think about generating reliable cash flow, like Strife. We'll talk about that a bunch of times today as to why. Also, diversify to reduce risk, but at the same time, you make money by having heavily concentrated bets in very good risk reward assets. That's Bitcoin and disruption to avoid catastrophic losses. And remember, anything can go to zero. And also very important, don't screw this up. Make sure you maintain your health insurance. Have protection for your family too. One debilitating illness can wipe out a family. Make sure you keep as well 5 to 7% cash for emergencies. And this could also be kept in assets that generate return, but have to be liquid so you can pull them out when you need them. We'll talk about that. Pulling out thing is so important too. Also, current portfolio risk and overexposure. I recommend try keep your Tesla and NVIDIA. If it's just too, it sounds like you've got a very big Tesla bag, try keep them under 50% just in case. If you have 50% now and then Tesla triples, that's okay. Then you take some off the table perhaps and rotate. We'll see where it all goes. Your crypto risk as well. If you have large Bitcoin holdings in cold storage that are risky, that's one thing I am very afraid of. Imagine you're holding $1 million in Bitcoin on a wallet and you screw up and lose it, or the house burns down, or you forget your seed, or you come off your bicycle and bang your head. That is what scares me. So think about, if you have that, I don't know if you do or not, rotate into some ETFs, maybe some proxies like MicroStrategy. And be prepared to jump ship at the flick of a switch. If anything happens with any asset, I always say keep your dancing shoes on. Okay? Overexposure to winning assets is high risk, but also very high return. But remember, keep an eye on cycles, rotation, and preserve and maximize capital. So you have done a great job. You have your bags. Now you need to protect them. Okay? And do not screw this up, as I say. What I would kind of rough, because of your position, you've got your high conviction equities. You'll be about 50%. Try to keep it at that. 40% Bitcoin and digital assets, mostly Bitcoin. Good. And remember this. Think about this as well. Think about now for the first time ever, and I am not a treasury type money market investor. I don't do that until now. There's a thing called Strife that can give you 10% or more per year. And remember, it's also risky, but what you could do here, what I like about this is you have the money to put aside, okay? So you can preserve your assets that are going to go up exponentially over the coming years, but you need some of your assets to generate money to cover your overhead, like your smaller house, maybe groceries, food, cars, that type of stuff. That can all be done now with Strife, which is a change in the game, which we'll talk about here as well in a second. But don't fade as well the power of rotation. This is our latest baby, by far the most complicated beast we have ever created. It took 10 months and a very large, crazy team and advisors and everything else. But if you look at this chart here, your 2-year hodl in 5 disruptive assets, your ROI is 160%. If you can rotate between them with a data science system, you can get 21x return instead of 1.6x. Okay, that is huge. Your ROI of $25,000 invested goes to $535K in 2 years versus hodling, which gets you $65K. So you'll hear more about this one later. Also, mixed in a little Strife. Shout out to Jesse Myers. Strategy announced the pricing of Strife, $85 a share. This means 11.8% annual dividend. U.S. Treasury bills offer 4.2%. This is key here. This is how Saylor will be able to source $3 trillion from the bond market to buy Bitcoin. This is like a circular thing, okay? he's giving you an asset that pays you 11.8% dividend, relatively low risk, not risk-free, but that's enough to live on. So we'll see as well. And I have some rules regarding that asset as well, which we'll get to in a second, but that's definitely something we need to consider. I'm even considering it as well. But remember, all assets can go to zero, and this is not financial advice. We'll repeat that again. Also, finally, you mentioned fun and doing things. So I thought a little bit out of the box here. Life, what I've learned in life, it's all about memories and making memories. Allocate 5 to 10% or whatever for travel, philanthropy, gifting, memorable experiences. Heaven forbid, going somewhere like a good park like Legoland or something. I don't know. Also, AI is coming. So your kids and your grandkids will need more help than ever before. This is the first generation, okay, that's now going to make less than the previous generation. All generations have become richer and richer and richer over time. Now that's going to go down, and there will be wealth concentration amongst those that are allocated correctly. I know that sounds like depressing, sad news, but that's why you're watching this channel, to prepare. So make sure you don't get stuck in that downdraft as well. Invest in the grandkids' future, 529 plans or whatever they are around the world, educational funds. Make sure they're taken care of, because it's going to be very tough for them as well. Also, this could be interesting too, because you sound like a very good investor. Consider angel investing. Throw 50K at a passion project. But remember, you may never see that money again. And remember, AI is making these angel investing things even more complicated and more risky than ever before. So bear that in mind too. And again, I'll stress again, make memories. And that is what life is all about. I hope you enjoy the answer to that question. And this one is tied to the previous one too. Again, I clouded some of the handle for security. Hi, James. Thanks for what you do. You've literally helped me make millions in gains. I'm 50 with 3 kids and just received a $2.5 million inheritance. Well, that's nice. Congratulations. And let's get back to the story. I have 700K now in Roth IRA, 600K in traditional IRA, which is great because it means you can trade and rotate tax-free, which is beautiful. The wife has 500K in an IRA, 300K in taxable brokerage, 800K in crypto, 3,000 MSTR, 1,000 Tesla. That's 3 times the retire on bag, by the way. Good job. MicroStrategy, also multiples of the retire on bag. 1,000 coin. Watch Coinbase maybe take some profit at 300, 350. 5 Bitcoin. Woohoo. We just saw what 3 Bitcoin can do. And 2,000 Sol. Plenty of home equity and income of 300,000 a year. Okay. Wow. You are also nicely set. Also, huge believer in Tesla and Bitcoin. What are some IA options to allocate the $2.5 million for long-term growth while managing risk? Definitely up to play hard with 25 to 40% of the $2.5 million. What WWJD? What would James do? I think I could be wrong on that. Let's this again. I'm just a guy on the internet. But if I was in your situation, and my situation is quite different, but I do a couple of things because, and again, I'll stress again, all assets go to zero. Remember, spread them around. But even if you are in very disruptive assets, if you have 4 assets and 1 goes to zero, the gains in the other 3 will far, far surpass holding on to average assets. That's a very important thing of balancing risk and reward too. Now, my theoretical allocations, drop myself to the top left. You are now in a position to go out on the risk curve. Sounds like you want to play a little bit. So I'm going to take that $2.5 million. I'm going to do a couple of little things with it. Again, what I would do. This is not what you should do. Just giving you some concepts that you can tailor to your own risk tolerance. I'd start looking at some aggressive growth leaps on Tesla, for example. Allocate 875K. What leaps can do for your bags is unbelievable. All right. You have to, though, remember, buy a little bit in the money, and you got to go out to 2027, like December 2027. I've got a lot of those positions, and I was able to get them at very low prices. But also remember, wait for the price volatility of Tesla to go down before you buy the leaps, or a big dip in the market. Hopefully we have one tomorrow. That'd be nice. Also, we're mentioning Strife again. You have a very good position, you got good salary coming in, but don't bank on that salary. But maybe consider, again, so you can keep all your money in the market through 2029, 2030, which is going to be so important those years, not to spend. The opportunity cost of spending today is very high. If you can generate or allocate 625K of that 2.5 million to Strife, and then you got your income to cover your bills. Woohoo. And then you don't need to touch any of your investments. All your salary can go into investing, and you have all your tax-free accounts where you can do rotations, etc. And then your stable core, build a nice, continue to add to your bag of NVIDIA, Tesla, Bitcoin, Solana, MicroStrategy, but watch the cycles and the seasonality. Remember, watch all the videos that we share, the TA micro lessons multiple times a week. There are times to buy things, and there are times to sell things, and there are times to stack things. That is probably the most important thing that you can adhere to as well. And again, mix in a little Strife. There's Jesse again back, pumping his Strife, which I believe, if it works, it's amazing. And in terms of the structure, again, example allocation, 300 grand into Tesla Leaps, for example, buy in the money call options expiring, say, December 2027. Target the 300 to 320 strikes. We know this thing's going to $1,000 or $2,000 in that time frame, probably, possibly. Even if it just goes to 650 or 1,000, you're still going to make a lot of money. Don't spend a lot on premium. If you get to a stage where the premium for the leap is almost the same as 50% of the actual price of the stock, don't do it. Just buy the stock on margin instead. Make sure your account is armed for margin. Bitcoin, I grab another 4 of those puppies, and then DCA into 5 more at 66K a month over the next 6 months. Don't go full bang. This is where you DCA, you time your buys, you time your rotations, and that can save you so much more money. I've thrown out 100K at Solana, not pumping Solana, but it's the leading crypto by far. It does everything on the blockchain, and that's just the reality. Buy 500 more of those, about $200 a pop, and then DCA 16,700 a month for the next 6 months. And remember, if the price goes up, sometimes you got to wait, and then that becomes 32K. Look at DCA on steroids. It's well worth the $19 to save you a fortune and time your buys. And MicroStrategy, 75K, maybe get another 200 of those. Michael Saylor, in his post, I shared at 5 a.m. this morning on Patreon. Check it out. He's inviting people to short his stock. He knows what's coming. He knows what he has, and it's exciting. And don't fade the power rotation. That's killer too. I hope that helps. So I normally don't do this many investing questions, but everybody had these types of questions. So sorry about that. But that's what I would do. And remember one thing I have to stress too. If you have your bags and you have your wealth set, then you can take on more risk. And kind of like, I don't want to say go to the casino, but go more leveraged. Okay. Go leaps, go SLs, and then you can afford to take on that risk. And again, we're going into a very disruptive time. So it's exciting. It's hard to sleep at night. It's so exciting. This is from General Mustard 45. In the Cyberbulls episode from May 8th, you showed the IA Tesla Valuation Model. What did the y-axis of the model represent? I think you said those numbers are sandbagged. And what does the non-sandbag version look like? Okay, first of all, I worked through this model painstakingly with Cern Basher, who is a modeling genius. Okay, I consider myself pretty good at modeling too. And we worked at it, and we really made it as conservative as possible. The unsandbagged version, I won't even share. I'll share it on Patreon later, but it's actually bonkers. It really is bonkers. But to get to your question real quick, this is the sandbagged evaluation with Cern Basher. And what you need to focus on is all the different colors. Cast your eyes. I'm going to eliminate myself here. Cast your eyes on those two colors, orange and green. Orange is Robotaxi. Green is the Optimus humanoid robot. Okay. Those two alone. You can see the rest disappears. Even energy, which would be a huge business, it becomes zero after 2031, 2032, because nobody can scale like Tesla. Zooming in to this, the y-axis here is the share price per line of business. So if you blow this up a little bit, I'll be able to tell you exactly what it means. So let's not even talk about out to the future. Let's just focus on what this could mean. But basically, by 2031, the green line is the humanoid robot. No, hang on. Did I get that confused? Yeah, green line is humanoid robot. That would be worth, say, $2,000 a share, just that line of business alone in the year 2031. And the Robotaxi would be worth $3,300. And by the way, when you take into account Kathy Wood, she believes the Robotaxi alone will be worth about $2,700, $2,800 by 2029. We have 699 here for Robotaxi, like a quarter of what she has. So bear that in mind. Again, this is what I mean by sandbagged. Kathy Wood is a legend, but our sandbag, Cern and I, is a quarter of her target. So if you think these numbers are ridiculous, go check out some of the others too. And when you add them all up, that gets you to the total price, which gets really, really bonkers. So that's kind of what the y-axis is. I thought it would be unique to have that share price per line of business to really understand the breakout. Again, in 2033, the Robotaxi could be worth $15,000 a share. And the green, which is bots, is also worth $15,000 a share. That's the point in time when these two puppies actually match. And then after 2033, the robots go to the moon because they go after the biggest TAM on the planet. That is all the salaries and wages that humans like us, earn. Okay, there is no bigger TAM out there. We also have MicroStrategy going after debt, 300 trillion, which is also a pretty big TAM. But remember, GDP is what people make, and that's what's so important there. So thank you, General Mustard. Hope you like the chart. Moving on to the next question. This is Dude Suisse. And this is a pretty cool question because it ties into the future. And it also ties into my vision of the future. So I have a question about Tesla, Robotaxi, and Optimus. In addition to my huge investments in stocks and crypto, saluti in Switzerland, I have set up my own business in the short-term rental sector, Airbnb, etc., i.e. classic rent-to-rent system. After all the great news in Tesla about the upcoming launch of Robotaxi in June and Optimus in 2025, 2026, I have exciting business ideas popping into my head with a big smile. Could you draw a business model to indicate whether this is realistic, please? If you use a Robotaxi as a private investor in the rent-to-rent system, 2 to 3 cars in your own fleet, full FSD, innovative charging, automatic cleaning, maintenance. I imagine Optimus primarily as an aid for cleaning and laundry in order to save cleaning staff, e.g. one bot per apartment. Do you think it's realistic for companies like Airbnb, platform companies, to adapt this business model and make it accessible to small businesses like myself? I envision a future where my Robotaxi picks up my guests directly from Zurich Airport. Kloten, I've flown in there 1,000 times. I know it like the back of my hand. And drives them to my apartment, then shows them around Switzerland as a vacation car. And during their stay in the apartment, Optimus does the cleaning and service, as well as serving the dinner in the evening. Every service is paid for, of course. Does this sound feasible? So it's a beautiful view of the future, and we were all excited about that. But I'm just gonna throw a little bit of cold water on that vision, just to temper things. First of all, this is my view of where we are and where we're going. So don't expect a lot of this to happen soon, and especially not in Switzerland. So Robotaxi, not feasible in Switzerland in 2025, will be happening, by the way, in T-minus 13 days in the United States. Fingers crossed if it begins June 1st or sometime in June. So give or take 13 to 40 days, it's going to be happening here. The Optimus also not feasible. It'll be internal use only. They're making 10,000. They hope 5,000 will be able to work and do productive work in factories. Now let's go forward to 2026. It's possible if they expand it to Europe. The beauty of Switzerland is they're not beholden to the EU bureaucracy. So I do believe countries like Norway and Switzerland will adopt FSD first. and then Europe will be a fast follower. Then regarding the bot, now, this is the timeline that I see shaking out. First, Tesla will use the bots in their factories. Then Tesla will test the bots with their suppliers in their factories. And then Tesla employees will get a couple of bots to test at home. They like employees to test things. The employees are running around California right now and Austin, Texas in Robotaxis and have been for many months flawlessly, from what I've heard. And then retail will get access to the bots, but that could take 3 years or more. And because of security, it might just be US only first. So don't hold your breath, first of all. But I do have something else to say that is kind of pertaining to your question. I didn't do detailed financial modeling, but once it becomes much more of a reality and when we can see the line of sight and the cost, then I will model how many taxis it takes to retire on and all that type of stuff, because I'll be doing that myself. Now, this is kind of my view of what's going to happen. And this goes a little deeper than your question, but it's important to be aware of too. And this is kind of my vision of what's going to happen in the future. Basically, I think there is a time when AI will disintermediate and democratize everything. So the chokehold that the Airbnbs and the Ubers and all those types of players have on the world will go away. AI and social reputations and reviews and having the ability to create niches. I like what you're thinking in terms of your niche, your whole package, pick you up from the airport, bring you around in a car, show you all the sights, go to Jungfraujoch, all that type of stuff, and then come back to the apartment and make a nice dinner. It's brilliant. And that could be your niche. And the question is, how long will it take? And do you need Airbnb and others? No. By the time this is all available, you will build up your own social persona, profile, reputation for your business. And anybody who's looking for your niche will be able to find you instantaneously. There's no point in paying all those fees to somebody who's just using you to make money. So that's what I see happening. I see AI literally ripping everything out of these Airbnbs and Ubers of the world, etc. Now, by the way, then I get the question, oh, but that means Robotaxi's dead too? No, because Tesla can manufacture at scale at a very cheap price. That's their ace in the hole. So let's not forget that. But look at some of the topics here to prepare for. Again, the way you're thinking, you sound very young, which is brilliant. But control, the centralized control for these things will be destroyed by AI in the future. There will be peer-to-peer, no central control, and managed by users. The other thing as well, your high commissions and fees, 30%, etc., or even more, will be nothing. You'll be able to pocket all that cash yourself, which would be wonderful. Trust and security. The blockchain, perhaps, will ensure your transparency and your security and your reputation, etc., so people can't gamify that system. But right now, the centralized authority controls the reputation, etc., of the 5 stars for the drivers, things like that. That'll all go away. And the user experience and established interfaces. The early systems, when you start building something yourself, you'll talk to Replit. You'll ask them to build your equivalent of an Airbnb app for your market with your niche and your value prop. That will easily be found by anybody searching for you on something like X. So remember, AI will make it perfect by the time all this stuff is ready. Regulatory compliance, we'll see where that goes. There could be some licensing required on your end to make all this happen, but it'll be a nothing burger, far less than the fees you pay to Airbnbs, etc. And adoption, okay? I'll stress this again. You have to have that niche catering to get that critical mass for where you want to go, okay? So if there's a way of pulling over your reputation and your reviews, maybe from Airbnb, storing them, so when the day comes when you are when you're able to go direct yourself, people will be able to find you and how good you are. That will be very important. So that's the way I kind of see the future rolling. And I hope you like that answer, but it's going to take time. Think 3 years plus. But I will also stress that the rate of change of AI and development is insane. Absolutely insane. So it's coming, but not sure how long it's going to take. Next question. Oh, by the way, on that previous question, I would stress everybody start thinking in this dimension too. What is your niche? What do you like to do? And how can you build your own business in the future? Because you won't need centralized platforms anymore. All right. Next and final question is penultimate question from Belinda. Lots of questions this week. Thank you, James, for all you do. Can you please help me weigh up the math for which way to hold Bitcoin? In my country of New Zealand, if I hold the ETF, I pay 5% of the total start of the year market value in each year, but nothing on the profits when I sell. And second, if I hold direct Bitcoin, I pay no tax until I sell, but the tax on profits is 39%, which works out better over the medium term. Thank you. Super interesting question. And I was not aware of this tax situation, but let's look at some numbers as we do. So I'll turn off my camera here again. I'll put myself up. This is New Zealand ETF versus direct holding. So if you imagine your initial investment is, 10 grand, and Bitcoin goes to 850K in 5 years. That's sandbagged, by the way. Your value of 0.1 Bitcoin becomes 85K. Your growth rate's 53%. Effective growth rate is 48.5% after 5% tax. And your final value before tax is 75K. Zero tax on sale. Therefore, ETF looks good. You pocket $75,730 after 5 years. Now, direct Bitcoin, 39% capital gains tax at sale. Invest 10K, becomes 850K. Then you get hammered with tax, $85,000. Leaves you just, you have to go to pay 39% tax, $29,250. Leaves you 55K. So that's not good. Now we do have a second variation too, depending on how much, kind of a simpler version. This is your final value of the ETF, 757K, zero sale on tax. Net gain after tax is 657. That's assuming you invest 100K today and you cash out 5 years later. Direct Bitcoin also loses. You only get 457 after taxes. This rule, okay, it's easy way to think about this rule. If you're just paying 5% versus the CAGR, the compound annual growth rate of Bitcoin, which is a lot higher, take the 5%. It's sweet. It's a delicious deal. Now, if the CAGR falls down closer to 10%, that changes, especially if you take bear markets into account and you're only in there short term, or you don't make anything at all. Then the direct version works. But overall, if you're there 3 years plus, stick with the ETF and the 5% tax. I hope that helps. Next question is from MH48. Do you plan to resume perp trading on Solana at any point during the range of this bull? I enjoyed your trade alerts in the past and was wondering if you're going to be sharing any more of those, as it appears the crypto landscape is beginning to improve. Thank you for all you do. This is so important, and let me explain exactly what happened. So when we were doing this, we had 16 out of 16 perfect winning trades, salami slicing, as I call it, making lots of cheddar, as they say. But what I discovered was when more and more people started following us into the trade, we became a big group trading the same way. And that was obvious to market makers. They see the pile of orders and they can predict what the group will do, and making it easy to make us targets. So this is the other problem, is the market makers are then in a position to push prices to hit liquidation levels, forcing traders to close and get completely wiped out, pocketing the liquidation. And also, it becomes like a very big over-leveraged mess. Perp trades use high leverage, and a group piling in creates a risky stack of bets. And the market makers see that. They have full visibility into what we're doing. And they trigger a chain of liquidations by nudging prices down, wiping out the group's position. So in short, a big group trade is clear, risky target, and we get hunted. We become a honeypot that gets hunted. Now, what we did do during those 16 trades is show you the method by which you do make money on perps. That's what you can follow. But we can't all, like if I share mine going forward, everybody will jump in and then we become a target and we all get wiped out. or what we all have to do is keep on throwing collateral at our trade to make sure we don't get liquidated. That's the other option. And in fact, Josh Mann just said something very similar literally today. or in the last 24 hours. This is kind of very important because he said, somebody asked him, Josh, thanks for sharing your insights and thoughts here. Do you think we'll see 84K again for Bitcoin within the coming weeks? I do see 84K, but want to warn you all now. I think I have reached a critical level of degen followers that the market maker will be prepared for an onslaught of leveraged perp buyers buying in there, thinking that it's free money. If so, the MMs will push into the 70s to basically liquidate the whole community, whatever it takes to take out the stops, to cash in your bags. Don't try it. Buy spot and hodl. So that is, unless you really, really know what you're doing, okay? Unless you're like pro level, don't play with perps. And remember, never, ever, like when I was playing with the Solana, it was 1% of my Solana bag. So if it went to zero, it didn't matter. But then it became very sizable. And then it became a target. So that's basically how it works. You can still make it. It's super nice, super fun. And even using Jupiter to perp on Bitcoin is amazing too. It's actually even easier than Solana. It's far more predictable to say. It's much more predictable to tell the direction of Bitcoin than it is Solana, because Solana is a smaller asset, so it can be liquidated much faster. It's much harder for them to push down Bitcoin. So hope that helps. Great question. And yeah, blaze your own trail. Find your own alpha. You have the methods and the tools to do it. And final piece, helping animals. We have these two that we're trying to help find a home for. This is, we donate to the International Marine Mammal Project to help support the efforts to place Wiki and Keijo, who were raised into captivity, and now they need a new place other than one of those horrible performing parks. Don't ever give your money to the SeaWorlds or anything like that. They are not good for the animals. And tomorrow morning, DCA Live, as usual, every Monday without fail. Even if it's just me on my own, we're going to make it happen. Biggest part every day is turning up and enjoying what you do too. Don't forget, I'm going to do some live questions now, but hit the like and subscribe as well if you learned something new, which should be definitely very possible. So, and thank you to the mods in the chat team, Tesla, Sean D, K8, everybody else. Let's get into some questions. How long have I been going? 50 minutes. Whoops. Long. Okay. Let me see. I am Colt. I got to blow this up. I can't. I saw a video where a guy was talking about what sector to focus on beyond AI, and he said it's quantum computing. He listed Qubit, RGTI, and IonQ. Is this an area of disruption we should consider? I'm Colt. I analyzed all those companies, and I did that about 2 or 3 weeks ago in this exact video Q&A, and I couldn't find anything worth investing in. They all have huge amount of debt, no cash, no profits, super, super risky. And remember, if you really like things like quantum computing, just invest in Google, which is on sale right now. They are probably one of the leaders too. So watch that space too. Moto 89, Tesla still the winner? Question mark. It always depends on the price. Always depends on the season. Always depends. Like we were buying a ton of Tesla at 106, a ton at 150, a ton at 160, a ton at 220. All right, now it's 350. And this is all just going back over the last 12 months or so. So it depends on the season. And right now, we're coming up on Lilo level 6 on Tesla. We still have nearly $500 as the all-time high. It's going to get back there. But, 350 to 500 versus where Bitcoin could go, it all depends. And we don't know what's going to happen. But we do know massive disruption is coming. So for sure, over the next 6 to 24 months, crazy things will happen to that stock. We just don't know exactly when it's going to kick off. It's already kicked off. And the institutions are buying like they've never done in the history of Tesla. They are bought more Tesla in the last 2 quarters than ever since its IPO. So bear that in mind too. That's always a good sign as well. But we got in first. So retail for the win. Yay. Doc Intern, you said that the rich don't sell assets but take loans against them. Always wondered what exactly does that look like in practice long term. I pay interest and principal, repeating next year, tax implications, etc. And what do you think is a realistic CAGR for a 50-50 MicroStrategy Tesla bag for the next 5 years? Well, that's a first question is, yeah. So if you are borrowing against an asset that's going up in price, say for example your loan to value is 25%, always never ever do liquidation. I heard stories about some company offering 70% loan to value against Ethereum. They are looking to liquidate you. Don't do it. 25% is where you play, so you can take a huge downturn and still be fine, like a massive 75% downdraft in the asset. So be careful of that too. Just like the market makers, that's why these guys do the lending, so you can be liquidated and smashed. Don't let that happen. Don't let anybody ever take your cheddar. But the beauty is if you pick an asset that's always going up, or at least with some undulations that you can weather, like a 25% loan to value, as it goes up, you can basically pay your interest and collateral by buying or getting more of the loan. If you start with, say, $1 million loan and your collateral is 4 million, okay, and then the asset doubles in value, now you have 8 million in collateral. You can borrow 2 million. So you can use a part of that to pay off the principal and interest. And that's the idea. As things go up, that's what the Jeff Bezoses of the world and everybody else does. So think about that. And then the final question you had was the CAGR for 50/50 MicroStrategy Tesla bag. If there is a Bitcoin bear market, MicroStrategy will get whacked hard. That's just how it works, okay? Just like we had the delicious buying opportunity last bear market, you know, and MicroStrategy fell to 160, which is $16 now. That's what you have to be prepared for. So the other thing is when you look at these two assets, we're coming to the end. If the 4-year cycle continues, and I think there's a 20% chance it won't because of the treasuries that are stacking, there's simply too much buying happening for a bear market to happen. And even if we get a mini one, it'll be probably like the drawdown we just had. You know, we just had a Bitcoin go to 108K, fall down to 75K. It's a big drawdown. Could go to 150K, fall down to 105K. You know, that's what you need to beware of. Either way, it's going to be good. But what Tesla's about to unlock in terms of value creation over the next 2 years is mind melting. That's the ace in the hole that Tesla has over Bitcoin and MicroStrategy. So the CAGR for 5 years will be violent. And I'll say as well, if the Bitcoin Strategic Reserve happens for the United States, all what do I say? All rules are off or whatever. Oh, it's been a long day already. All bets are off is what I mean to say. All bets are off because that will drive the price of Bitcoin to the moon, which will drive the price of MicroStrategy to the moon. And when I look at all the players, somebody just made a $400 million perp bet, 40x leverage long on Bitcoin with the 96,600 liquidation level. They know something's coming. So I think there could be a big announcement that will drive Bitcoin to the moon. In fact, I haven't checked on the Bitcoin price. Ooh, it fell below 104K. All right. Today's range hit 105,950. So it's volatile, but it's taking a bit of a breather right now. But somebody knows something is up. So watch this space carefully. And if the market makers are looking to liquidate somebody, they should go after that $40 million honeypot. Take it down to 96.6. Who knows? That could also happen too. And then a very quick rebound. So that's actually, I'll share that little secret I have later on perp buying and perp opportunities. So again, very tough to say, but there will be some crazy things happening. Doc Intern, thank you for the question. Jack Atskin in Switzerland too. What's your plan with Sol strategy? Will you sell the top cycle or keep the same forever? Yeah, I still hold Sol strategies, and there's the DeFi Development Corporation. They're both kind of doing well. DeFi Dev has been crazy. They're partnering with Bonk. So that's just, I am very overexposed in treasuries, both Sol and Bitcoin. So I got to watch myself there, but I'll hold for now and we'll see where things go. I do believe we'll still get some good Sol action. Again, it is dramatically undervalued right now. So holding for now. And thank you for your super sticker. AZ Roller, B-Man63, Dog1, Dude Travels, Adam Q, Half Viking again, Signal 103, Forest, Pepe Dork, and Adamski. Thank you all for coming. I hope I got everybody. And thank you once again to T&D, Tesla, and Sean D, and Beer D, and Cards Fan, and Alpha One, and everybody. Thank you all for coming. Hope you enjoy the show. I'll see you all tomorrow morning on DCA. Have a good night.